Hello, folks. Brandon Chapman with you. It's another Theo Night video for March 14th, 2022. It's glad to be with you. The title of today's broadcast is Bond Yields and Inflation Expectations Soar with FOMC week ahead. You know, a lot of stuff happening today, right? Bond yields breaking out to the upside, S&P down, futures down 0.5%. You look at SPY, reflecting kind of cash flow, down about 0.73%. Interesting day. Not a lot happening. I mean, you wouldn't think like, 0.75% being down for the market. A couple of months ago, it would have been very, very significant. But right now, it's just it's really kind of a non-starter day for the most part. And as you look at all that's transpired, I mean, all the big sales, particularly as we approach the top up here, November, December. Today, you saw another 1.2 million print at 420.12. So we got that line drawn in here. Remember, sale or buy doesn't matter. It's just the print. But we broke below it intraday and we kind of stayed below it throughout the session. Again, this kind of occurred about 10:30 my time. So right about here, 420.12. Got to see we broke through it, retested it, and then fell. So that's going to be a key level moving forward. Can we break above it or do we stay below it? And then we've got our low from February 24th, which was really the biggest, most bullish day we've had for a really long time, when the breadth of the market was so bad right off the open, and then we rallied strongly from that point. We just haven't seen that kind of day of capitulation as we've seen then, and we'll see whether we get it tomorrow or not. But as you look at the VIX, what it's telling you is that the VIX isn't moving up a whole lot. I mean, there's nothing the market's not seeing right now that it hasn't seen already. There's nothing that the market knows right now that it doesn't already know, right? So don't expect a whole lot, but we do have the Fed statement this week. Look at skew. It's about 130, for example. This is Friday's close. You look at VIX, 3M plus VIX ratio, which, by the way, we're in the process of launching our Theo Invest. All you got to do is open a free Magnify account and just use our TheoTrade link. And you'll get access to our Theo Invest education, which is pretty extensive. We're in the process of we're going to teach you about these indicators for free if you open a free Magnify account. But anyway, you can see that we're moving higher a little bit. We're above 1. So again, market's not pricing in a ton of movement right now. The volatility curve is fairly flat, and we're just kind of hanging out, waiting to see what's going to happen. Now, on Wednesday, we do have the FOMC policy statement. We have the press conference. The question is what? What is going to happen with rates? It's pretty well baked in the cake that we're going to have a quarter point increase coming up. But you'll notice that going forward here with all this inflation data, things have shifted a little bit for the worse. In fact, look here, March 8th, 7th, the 2nd. Look at how the red line is shifted lower. Today's data certainly is pushing things, right? It's questioning what's going to happen. And when you look at TNX was up 1.36 points or 6%, raised going from basically 2% to 2.1%, 2.14% today. You see on TYX up similarly, FVX up similarly, even more in fact. So FVX was up the most. The curve is flattening. The only question is, what's IRX going to do? And do we start to price in more Fed rate increases going throughout the year? The sell-off we saw in this suggests that we are, okay? It suggests that we're reshaping things, and that's not good for the market, okay? The Fed is woefully behind the curve, and as we look at New York Fed survey of consumer expectations, January was 5.7%, the lowest since October, and the biggest drop since 2013. Now we've seen that flip. It's now 6%, and at the all-time high, while median inflation expectations are 7.5%, which is also at an all-time high. We look at expectations for gas prices, expecting next year to be up 8%, food up 9%, medical up 9%, college up 9%, and rent up 10%. I mean, inflation expectations are really picking up right now, and 3-year inflation is 3.77%. Okay? All-time high is 4.2. So the point being is that, look, I mean, consumers are expecting inflation to increase, and also spending expectations are increasing as well. Again, you get this effect of higher prices of goods, but also the fact is dollars right now. I mean, shoot, I was talking to my brother last night. He went to buy some food supply stuff. In a week, it went up 50%. Okay? Prices are rising. People right now are trying to get dollars out of their hands, trying to buy stuff if they can, save it if they can. But where do you save it? 3-month T-bills are what? 0.37%. 10-year Treasury yields right now, 2.1%. And what's driving this right now is inflation expectation, but also the fact that, look, the red line is lower than we were last week, meaning what? More rate increases are expected for this year, by the way. Look at December down here. We're about what? Pushing that 9.8? Sorry, 98, which is close to a 2% Fed funds rate. Shift is happening, right? People are wrong-footed right now because inflation is surging and we don't know when it's going to come down. That's a big problem, right? We talk about the dollar reserve currency. Oh, China and Russia are getting together. These countries are getting together. Well, what's established the dollar as a reserve currency? It's the fact that people are willing to lend to us, right? They're willing to give us goods and we send them dollars. And they buy our production assets. They buy farmland. They buy treasuries to keep interest rates relatively low. The establishment does not want that to change. They don't want the dollar to diminish in terms of its reserve currency because guess what? It's going to cause our debt of $30 trillion to look a whole lot bigger with interest rates going up because they're not willing to buy our debt. We're not there yet, but it is a risk. Okay, and inflation right now may break the back, and we'll see where we go from here. The supply chain, Apple today, for example, Foxconn, shutting down some facilities. Huge, right? Big trade today. We'll look down here. Equity trade, 1 million prints at 150, 151. So right off the open, we closed it. We traded through it, broke down below it. This could be a significant level for Apple moving forward. But that's a big deal. How are you going to get Apple devices? Apple does not own their means of production of their physical products. I'm not talking about their intellectual property, their software. I'm talking about what? Talking about iPhones in this case, right? They don't own the means of production. They've outsourced it to China. And the fact of the matter is, we are no longer in a world economy where we can produce in foreign lands and expect to have the same kind of a time frame of getting it, right? Or the reliability. And the problem is we're not currently sourcing stuff in the United States. And again, I'm pro free market, right? I'm pro for the ability to produce stuff internationally. But the reality is they did it out of convenience. And it was facilitated in large part by virtue of what? The monetization of the debt, the weak dollar policy, low interest rates, all this stuff leading to what? Poor decisions on the part of companies. All right, so Apple's in a little bit of hurt today, breaking through support above average volume. Okay, now as we look at the periphery here, so we're looking at some of the areas that have really been surging, like oil, for example. Oil's down big today, right? Continuous near-term path here. Again, we got really over our skis a little bit to the upside. How much of it's going to be impacted? How much production is going to occur here? How much production are we going to see, from Iran, or whether Venezuela, Saudi Arabia? Do OPEC nations start to cheat? I mean, this is where it gets interesting. If the price starts to look like it's going to head down, do they start to cheat on themselves, right? Do they break, their production kind of agreement? Maybe. I'm not sure we're there yet. But in the near term, we're seeing profit taking. We just took out the 61% retracement mark of the move from February 18th to the high of March 7th. Okay, so maybe we have a chance to get back to 90. But the risk right now is still to the upside. Because why? Well, look at forward/CL. Are we still in backwardation? Yes. Has the curve flattened a bit? Yes, it has. So this is showing last week up here. Look how it's flattened. And look at this little hook right here. So watch this, right? This may indicate we've got more downside. But again, remember, the supply dynamics are really, really difficult. My expectation, we may see things firm up shortly and then may see it rise. We'll see, okay? But this is interesting. This is something I've been telling our TheoTrade members to watch for. Watch when it starts to flatten. It's exactly what happened today. And companies like Rig really got taken down today, right? Down 12.5% after spiking last week. We're above where we were at the beginning of March. Okay, but this is some bigger selling on what? Lighter volume. So what we're seeing potentially right now are these recessionary type indications? Are consumers done? And we're going to see a continued pullback. I mean, this is the uncertainty of what we know. But we did see today, if I bring up Rig, Rig is a, where do I have it here? Forgot to underline it in my list. Anyway, but Rig, it was a May. What you saw today was a bit of a roll down, right? Rolling it down from 6, rolling it down to 5. All that's saying is, look, we haven't given up on it. We're rolling it down at a cost to the $5 strike instead of 6 because we think it might bottom and rally. And the fact we saw as light of volume today as we did, and Rig is an oil service company offshore, this thing may pick up. So again, it may not move as quickly as it did in the past, but this is kind of interesting as a setup here. Do we start to firm up and start to turn? One area of the energy industry that is looking potentially up here in the near term also, look at EQT Corporation. Okay, this is a natural gas company. We've got support here around 24.72 on EQT. It was a June expiration at the 28 strike price here. So again, looking at out of the money call option, mostly buying at the 28 strike, giving you kind of indication we may break up through here. And again, June's a couple months out, but again, it's an early indication. So you might look for a little bit of upward movement tomorrow, maybe a trade through today's high, something to kind of indicate a turn. Also in the natural gas space, we got ET, right? Energy Transfer Partners, down 2.7% today. And yet what? And yet we got this May expiration here, buying the $10 strike price, mostly buying the 10. Got some other interest creeping into the 11. Again, it's kind of interesting. On a day like today, people are taking advantage of lower prices and what? Taking some upside trades. Again, not expecting to move quite as quickly as it did before, but who knows? But there's still people taking risk in the energy space and thinking that this may bottom quick and rally. Now, we talked and looked at bonds, for example. TLT is a 30-year bond ETF, and this broke its March support of last year today. And again, thinking about this oversold condition that it is in right now, what does the Fed signal, right? Do they start to create concern? Do they become more hawkish in their statement? Are they looking at their New York Fed survey of consumer expectations? Are they taking it seriously? Who knows, right? But we'll see in the statement. But is this a time to consider starting to get long TLT a little bit? There's definite and definitive risk in this, but it is relatively oversold. You look at the 14 April expiration here, 134, 137, right? This was an upside spread that was bought in part, maybe a little more than 137 sold, but point being is what? Someone stepped in today with some quantity, buying upside call spreads to 137. Now, again, it's not out there a ways. It's only about the 50% retracement of the most recent sell-off. But again, there's some modicum of expectation. We may have a chance of rallying here. And of course, corporate junk bonds, right? Took a major hit today, down 1%. This is one area I think I talked about last Wednesday. In fact, on this video, HYG, AGNC, right? NOY is bearish opportunities. Again, HYG got hit on the nose the last few days. So guess what happened today, right? Well, we're seeing a little bit of a reversal in expectations. And if we go to the 25 March expiration here, what happened was this, right? We're out here selling at 80.50, buying an upside call spread at 81.82. Okay, so again, if Treasury yields start to fall, this may see a little bit of buying, assuming risk spreads don't widen out. And so again, we could catch a little bit of an oversold bounce here in HYG. So again, what could you look for? Upside call spread for 25 March, not priced all that favorably. You come out here, again, look at the declining volatility. Vertical spreads don't work as well until you get out here towards that 84, 85 strike, and it starts to become a little bit more favorable. 85 might be a bridge too far. We're talking near term, maybe 82, 83 possibly. And HYG is kind of an oversold bounce. But again, you could buy stock, for example, and other things, but verticals might be a little tough on a product like HYG. Finally, we're going to wrap things up with calm. So stay calm. Cal-Maine Foods. Huge breakout today. If we've been watching food stocks in general, they've done fairly well. Cal-Maine Foods, if you're not familiar with it, it is a what? Producer and distributor of shell eggs in the United States. If you can't afford chicken, we're talking about We're talking about the bird flu, wiping out chickens and turkeys. My goodness, 2020. I mean, how many baby animals did we destroy because we weren't processing the mature animals? I mean, we're looking at a potential crisis here in terms of food, generally speaking, and meat. 25% of wheat production occurs in Russia and Ukraine. Russia's talking about suspending exports until, I think it was June, for example. I mean, we may be experiencing a very, very dramatic shift in terms of food supply here coming up in the near term. And again, do we start to eat eggs? No chicken available, no beef, no pork. Let's just buy eggs. Anyway, let them eat eggs instead of cake. And we're up big today, about 5%. Now, there were some bullish option activity in Cal-Maine Foods. This was it wasn't super out there big, but 2,800 contracts at the 50 strike for 14 April, mostly bought. And you start to look at where $50 is, it's up here, right? So this is a company that, and again, has some upside potential here. It's probably well positioned given the climate right now within food. And again, potential $50 move in the next 31 days. And again, if things keep shaping the way they are, we could see a move like that very readily. Now, as you look at the volatility structure, what you'll notice is that for an April expiration, you could get out there and buy a $50 strike price. But my goodness, you look at the 41%, 44%, spreads are a little bit wider, but not, still within reason. You could buy a 47.50, sell a 50 here for April, and that's reasonably priced for the upside. Anyway, so something to consider with the volatility. I mean, the open interest isn't huge, with the exception the open interest is going to be built here at the 50, but it is an interesting stock nonetheless, with a move of potentially about 10% opportunity, and with the amount of risk about $1.50. Risk $1.50 to make, 5. That's not a bad deal as a risk and reward trade. Anyway, folks, it's been a pleasure being with you. I'll get you back in next week's video. Thank you. Have a good one.